Stay informed on earnings trends and analysis in Zacks Earnings Outlook.
Well, it's been a busy Q2 earnings season so far, and here to help us put it in perspective is our research director, Shiraz Mian, who we check in with during reporting seasons to just see how you've got your finger on the pulse of what's going on. This time is no exception. We're sitting here talking on July the 28th, a Thursday. It is the busiest day of this week as far as earnings reports are concerned. But let me go back to Monday of this week, when you wrote in your earnings preview that the picture emerging from the Q2 earnings results so far, one of modest improvement from the extremely weak levels over the last couple of quarters. But if you really take a look at the results that have come out up to now, it's been kind of a mixed bag. Some big names have reported to the positive side, others to the negative side. I guess the real question here is, does this represent a turning point, the fact that it is a mixed bag?
I think that's a fair conclusion, and that's the hope here, that the worst is behind us. We can look forward to relatively better times. And when I refer to and talk about improvement, it's not in the terms that we typically associate with improvement, positive earnings growth, a lot of positive surprises. It's just that it's not as bad as we have become accustomed to seeing over the last few quarters. So earnings growth for the S&P 500 would still be in the negative in Q2, but less negative. And in a number of companies, in a mixed kind of fashion, but a number of companies have talked up either their entire or parts of their businesses. So you're right, some big names have missed. A number of big names have come out with good results. On this day, this morning, you mentioned the busiest. There are 63 S&P 500 companies reported results. They're either reported in the morning or some are reporting in the afternoon. So Ford missed today, and you would remember a few days back, GM had a big beat. Caterpillar continues to underperform. United Technology did a lot better. Coke missed. Pepsi did better. So it is this mixed bag, but overall it is not as bad as many of us feared and suspected, and that's the improvement aspect of this earnings period.
Something else to note in the reports that have come out so far, a lot of revenue reports have surprised positive. Is that a hopeful sign for the future?
Yeah, the proportion of companies beating revenue estimates is about in line with historical periods, but the growth rate is surprisingly positive. So we have the proportion of companies that have reported results already. Revenues are positive for that. And that's a better performance than we have seen from the same group of S&P 500 members in other periods. So yes, I'll add it to the improvement side of the bucket when discussing this earnings period.
All right, let's look at the scorecard.
Okay, so I have my busy-looking scorecard table here. 278 S&P 500 companies have reported results. That's 55.6%. So we are past the halfway mark. That represents 61.7% of the index's total market cap. Total earnings, as you could see at the third to the last row, are down 3.5%. Total revenues are up 0.5%. 75.2% are beating earnings, and 54.3% are beating revenues.
Okay.
In the next slide, I put the results thus far in a historical context. So what we have done here is we have compared the growth rates and the beat percentages for this 278 S&P 500 companies with what this same group of companies reported in Q1, and then in the 4-quarter and the 12-quarter averages. And as you could see, the growth, while still negative, a decline of 3.5% for earnings, is nevertheless a smaller negative than what the same group had in Q1. But relative to historical periods, it's still on the weak side. Revenues, we touched on that a little earlier, a positive 0.5%. That's an improvement over Q1. That's an improvement over the 4-quarter average.
Okay.
And on the right side of this chart are the surprises, and you could see that the proportion of companies beating earnings and revenues are about in line with historical periods, or even a tad bit below those levels,
Okay.
meaning to say that the improvement in results that we see is not a function of extremely low expectations, which adds to a
Which we've talked about in the past.
That's right, which we have talked about in the past.
Yep.
And then this slide presents the composite or blended picture for Q2, meaning it combines the actuals that have come out with estimates for the still to come. And as you could see, earnings for the S&P 500 are expected to be down 3.4%. This will be the 5th quarter in a row
Right.
of earnings declines for the index as a whole. So the growth picture isn't that impressive or even encouraging, but it's not as bad as we have been seeing in other recent quarters.
And what about standout sectors?
You know, let me get back to the scorecard table, and here I'll flag 2 sectors. Medical is doing extremely well. 87.1% are beating EPS estimates, and 80.6% are beating revenue estimates. It's totally off the charts relative to the other 15 sectors. And then the other sector I would flag among the major ones is technology. And even though technology's growth isn't really much, growth is a problem across the board for all sectors. But results have been better than expected. 81.8% are beating EPS, 75.8% are beating revenues. So overall positive results from technology and medical.
But at the beginning of the season, the big banks didn't fare out too badly. They didn't lift the financial sector?
They did. Finance did reasonably well, and it goes back to the better than feared aspect of the results that we are talking about. So J.P. Morgan, Citigroup, Bank of America, all of them, not only in their core consumer banking business, but also in their capital markets and investment banking, had results that surprised to the upside. So yes, the medical and technology are really standouts, but finance did reasonably well as well, and so did a number of other sectors. Autos is doing pretty good as well. Their results have been good. We mentioned Ford, but GM had very impressive numbers, and that's showing up in the aggregate picture as well.
All right, and 2 other things that affected earnings negatively in the past quarters. Oil price decline, the dollar rising. Is that still going on?
Yes, it is. Oil and the energy sector as a whole still remains a drag on the aggregate picture. The earnings for the oil sector, if I refer back to the blended picture for Q2, are expected to be down 79.2%. And on an ex-oil basis, it's barely in the positive. So yes, energy remains a drag, and it remains a drag through the 4th quarter of 2016. So we have another quarter of drag from the energy sector in the current period in Q3. And then in Q4, the comparisons start moving in favor of the energy sector. Dollar is a problem, not as big a problem as it was in Q1 and in the 4th quarter of 2015, but yes, still remains a problem.
All right, so having said that, what does that say about the prospects of a better second half?
Yes, so the one hopeful sign, an encouraging sign of the results thus far is that if it is a turning point, if we have crossed a threshold, then it should add to confidence in expectations for the second half. And we're seeing some early evidence of that when we look at how estimates for the third quarter are evolving. And I have a slide that shows what current growth expectations are for the second half and beyond. You will see here that in Q3, earnings growth for the index are expected to be down 1.5%, and then positive growth in Q4, which then accelerates into 2017. So estimates for Q3 have come down, but they have not come down to the same extent as we would see at this stage in a reporting cycle in the last 4 to 6 quarters. So some improvement there. We'll see if the remainder of the earnings season, that trend could be sustained.
All right. Well, the next time you and I sit down and talk, we're going to wrap this whole Q2 season up.
Sure.
And the dust should have been settled by that
That's
point.
right.
We'll see
Yep.
exactly where the numbers ended up. In the meantime, don't forget you can always keep tabs on what's going on with earnings on the aggregate on our website, Zacks.com, because Shiraz pens weekly his earnings preview column on Mondays, and then through the weeks during the season as it progresses, his earnings outlook written commentary. Link to it all right off the homepage, Zacks.com. With Shiraz, I'm Terry Ruffalo.